Look for retracement back down around the 45s and get long, expecting some of these H period, I period, G period, E, F, G, C period shorts to cover. That time through 4 or 5 periods with that trade underwater. The 44 break to 43 was just too much we had to cover. Couldn't go more than 10% of our account from the gains generated in January. That's no good. So we took the loss, took the second trade, which was a small loss. Realized we were on the wrong side of the market pretty quickly there and got out of it. Saw the delta building positive in this J period bar. So we'll see if we can find a retracement entry for a long here. We're going to take the 46.75s long too, 46.75. Well, we could have got better trade location in the 46.75s if we would have been a little more patient and just looked at the line on the second of several monitors that we keep a check on our 5-tick reversal chart. The 45s were where the line was. 46s were premature, I think, but we're here with the 46.75s. We're certainly not going to take 2 more contracts on after that big debacle. We still have lower lows and lower highs on the day's structure. So this is certainly a position for a reversal trade based on that J period positive delta. We're actually negative delta in this J period now, slightly. But we're a lot closer to the zero line than the last 4 periods. Well, we got filled on the 48s. We'll keep our second 46.75 for a target up toward the point of control in the 50s. We have a positive bias delta on the bar, on the J period bar. Our stop's at 46.75. Considering that we took a significant loss, I'm almost tempted to put our stop a point and a quarter below, or a point below our 46.75, and be willing to give our point and a quarter up, just to have the opportunity to take advantage of any movement back toward the mean, or if we get caught in a short covering rally here. I'm uncertain as to if I'll do that at this point, but I'm certainly thinking about it. We're going to go ahead and put our stop a point below 46.75, 45.75. We'll risk a point below 46.75 our entries. Well, putting the stop a point below didn't help us any. We just got stopped out. Now we're back at 47. It's getting exasperating here. Man, look at this. Amazing. 45.75 was the tick. I'm going to take the 48 and a quarters. 48 long. 48 and a quarters long. Okay, we got filled at the 49 and a half. We'll put our stop at a 48 and a quarter. They didn't hit our stop at 48 and a quarter. They took it down to 48.50. I certainly want to be in the market. There's 48.50. Didn't get to 48.25 yet. There's 25. We're stopped out. We certainly want to be on board for a short covering rally. This J period is certainly build a positive delta. I'd like to get a better price than the last one, though. Jeez. Got some cross trade up here at the 49s, but we're starting to clear off some negative delta. Let's take the 48.75s, long 248.75. I don't like buying at higher prices. That's what I've done the last 3 times, slightly higher, trying to anticipate a break ad here on a reversal back to the mean or even greater. What's happening though is our trade location is increasingly higher, so if we do get our first target at a point and a quarter, the market can easily rotate back down to hit our stop. That's what's no good about having a position in an asymmetrical location. I might have to readjust the stop because of that fact. K period just opened up. We're going to change our exit strategy here. Typically we would take one contract at 50 at the first point and a quarter. K period just opened up. We had positive delta on the last J period. We are trying to build positive delta. We have 0 delta, positive delta on the K, about neutral. And see if we can ride both contracts up to help mitigate that significant loss earlier. We'll see how the strategy works. K period is breaking up into the 51s, 52s. We didn't get rid of any contracts yet. We still have our 2 for 48 and a quarter, looking for maybe a short covering rally here. Well, breaking our rules from what our protocol was during January, it certainly hasn't paid off for us. We were up in the 52s in the K period all the way to sell off here to the 46s, and now we're in the water on our 48.75. So I'm going to stick with this new protocol and see where it takes us. L period just opened up, and I don't like not following my January rules as to where it's leading me here. We're underwater on a 48.75s. We certainly rejected value when we went back into the 49, 50, 51 areas and sold off from there. The 45s here is right where we had support before we broke up to the 52s. 45 should be support. We see a little cross trade here. Going to take two more at the 42.75 since the strategy doesn't work at all. That puts us out for even on 4 contracts at 45 3/4. That's our target. We got out for even here at 46. We're going to stay until the close, but considering we had 4 contracts at a bad price, which we'll talk about in the snippets, we got out at 46. That gives us a quarter tick profit on 4 contracts. It'll be interesting to see where the market rallies. I would assume now what we've been looking for all day occurs in the last 45 minutes, and we have some short covering. We have a big divergence here on the positive side in the end period. But I'm glad I'm out for even at 46, and I'm gonna have a lot to write about in the snippets. Made a major mistake even on this last trade. 39s to 41s was the area on January 31st that we should have been long, not at the 48s. You know, the 42.75s are alright, but the 48.75s are terrible. And that's from just not thinking that the market can make it that far from yesterday's close at 80, you know, all the way down to 39. That's obviously, I got to get that out of my thought process. So, we'll have to think about everything. We raised our tolerance on that main loss on those 6 contracts, which equated to a cumulative total of 49 points. That's going to take a few days to work back, huh? And I didn't like that. We had an opportunity, I think on 2 occasions to get out near a break even, and then I think on the second opportunity we had a chance to get out for a couple points under break even, which would have related to maybe $1,000 or $1,200 loss instead of a $2,500 loss. That took a significant amount of our profit away from January's activity, took everything away from February. So that's going to make the graph look interesting. That's the beautiful thing about the analyzer. You can, you know, gauge your activity on a daily basis and cogitate and see what can be done. I'm still not sure exactly what to do with this threshold, the stop threshold. I didn't like 4%. I certainly don't like 8%. Both are rigid, and you know. But on the other hand, I don't like carrying 6 contracts. I might focus on trying to just carry 2 contracts and not try to better the position, but actually take a little more time and try to focus my entries on better trade location opportunities based on the volume and price chart. So we'll talk about that in the snippets. We're going to produce this video and take a break.